UK tax system stops you from building wealth. In this video, I'm going to share with you how I overcome it. Hey guys, it's Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. For those who don't know me, my name is Rahim Bar. I started my property investment just over 8 years ago. I was working as an accountant in a job where I was undervalued, underappreciated, going nowhere, working seriously long hours. So I decided to take my finances into my own hands instead of relying on my employers. I started my property investment journey with little to none of my own money by renting properties from landlords and subsequently rent those properties out room by room basis, and some of those properties I also rent per night as an Airbnb properties. So I used that money then to start acquiring my own properties. I became the first person in my peer group to become a property millionaire. I've gone then to build a multi-million pound property investment portfolio. I now have an estate agency, renovation company, and now I help working professionals like yourself to use property as a vehicle to make passive recurring income. So what I'm about to share with you here about taxes have earned the right to do so, because obviously if you're making money, it's very important for you to be tax efficient as well, to ensure you pay minimum tax as you could possibly can. Again, before you go ahead, I advise you strongly to seek for a tax advisor to help you save tax efficiently and legally as well. What I'm sharing here with you is an experience of myself and the investors I work with. So that's a disclaimer there right there. But what I'm about to share with you would help you stop the tax system eating into your wealth in order to get better and serious return in your investment. So, is the UK tax system holding you back from building wealth? In this video, I'm going to walk you through how to beat it with savvy strategies. Now, that is legal and can save you tens of £1,000s. I advise you to stay until the end to learn and understand exactly how you could make your money work a lot harder for you. 1. Utilize tax advantage accounts. What do I mean by that? Maximize your ISA contribution each year. Currently, the maximum amount to put in a savings account is £20,000 each year, and that's a tax-free savings account and investment. This shields your gain from income and capital gains. So think about it. If you've got money, literally you've got that money. So instead of getting it going to your account, you might want to channel that into an ISA account, because obviously you've got maximum of £20,000, and that £20,000 you put in that ISA account is completely tax-free. Nobody will tax you for it. That's another way you could save paying tax. Number 2, pension contribution. Take advantage of the pension contribution. You could be self-employed, you could be a director of your own company, or working for someone. It doesn't really matter. So contributing towards your pension or your personal pension plan, these contributions are tax deductible, and this then would allow you to put money aside and grow tax efficiently until you will draw the money. So basically you are hedging against the taxes. So instead of taking it, contribute towards your pension, that then will be deducted as part of your income and you won't get taxed for that. And then obviously putting it into a pension pot, it would only grow from there. 3, claim all your allowable tax reliefs. There are lots of them out there, but I will talk about few. 1, if you're married, maybe you want to take advantage of your marriage allowance, because there is a marriage allowance for couples living together in the UK. Or perhaps you want to take advantage of the rent a room allowance schemes. So in essence, you can rent a room in the UK and make up to £6,000 from that income you've made. So that's another benefit. You could rent a room from your home, which is legally allowed, and use that money and channel that money in your ISA account as well, if you wanted to. Or perhaps you want to invest in the entrepreneurial relief scheme, and this could also reduce the taxes you pay significantly from the income you've made. Number 4, invest in SEIS and EIS schemes. Let me explain. SEIS scheme stands for Seed Enterprise Investment Scheme. This is investment you make in startup company through the seed investment. These are the companies that's just about to start. They haven't got money to get their business going, but they've got brilliant ideas that could make lots of money down the line. So you as an investor who invest in businesses like that, whatever money you've got there, you invested there, is tax relief as well. And you can also deduct that from your income. And obviously we have the EIS scheme. The EIS scheme stands for Enterprise Investment Scheme. These schemes offer significant tax relief for the people who invested in these businesses, including income tax relief and exemption from capital gain tax on profit. So it's a beautiful way to help companies grow, knowing that you're going to make serious return on the investment when that company becomes fruitful, while you save significantly in paying tax. Number 5. Now this is important. Structure your investment smartly. What do I mean by that? Hold dividend paying stock in your ISA or pension to avoid dividend taxes. So if you've got money paid from dividend you've made, instead of getting it coming to your account, get it to go to your ISA account or your pension to avoid paying higher taxes. And that also ultimately enables you to be tax efficient. This would also become a wrapper to protect your investment income and your gains. Or perhaps you have property investment portfolios that is generating your income. So instead of taking the income, perhaps you want to take the income through dividend, which is lower tax. Or perhaps then you want to invest that in your ISAs and your pension scheme or any other businesses that you've got going on, because you only get taxed when you realize the gain or the income. 6. Leverage tax-free allowances. Utilize your annual $12,300 capital gain tax allowance by selling assets strategically to stay within the limit and avoid paying capital gain tax. So this then allows you to actually make $12,300 every single year without paying any tax from it. So you could have a property that you want to sell, for example, but you don't need all that money right away. You could structure something that we call purchase lease option, where you can agree for someone to buy your property sometime down the line, and agreeing they pay you £12,300 every single year. If they pay you that money every single year, in essence, you're making tax-free income at that point of view, because obviously you're not paying any tax from that money, because obviously it is money that is below the capital gain threshold. Last but not the least, 7. Stay informed on tax changes. I know taxes is complicated and it is done on purpose, right? But it's very important for you to stay informed about the tax changes, the government legislation changes, in order to understand how you could save in taxes and ensure you're making tax efficient investment decisions. Regularly review updates on the UK tax codes and seek advice from tax professionals that would allow you to strategically make investment decisions that are tax efficient. Being proactive can help you adapt to changes and continue to optimize your tax strategy. Look, by implementing these strategies, you can effectively navigate the UK tax system and build your wealth more efficiently. Look, don't let the taxes hold you back from investing. Take control of your finances and your financial future today, and get people that are knowledgeable, experienced, and most important, employ tax experts to enable you to invest strategically. I really hope this video has been helpful. If this video has been helpful, smash the like button below, subscribe to my channel for more amazing videos. I look forward to sharing the next one.